Indian market fallen by almost 20,000 Nifty level to 18,700 level. Such a big fall in market happened within a span of 5 days, and most of the retail investors are worrying now what is going to happen in the market. And today we are going to talk in detail what is going to happen and what are the reasons behind this. Okay, we are going to talk about what is the implication of this fall, which are the stocks and sectors to be looked after, and also what are the main reason why this fall is happening across the market, small cap, mid cap, large cap. We are going to talk everything about, so stay till the end. It will be an interesting video. So friends, welcome. My name is Tapan Doshi. Welcome to my YouTube channel. So let us start and understand why this is happening. So one of the first of foremost reason is that Israel and Hamas war which is going on currently, and the war is not restricted to now to that territory. Slowly and gradually it is expanding across territory, and that is the main worry. See, now even Lebanon and Iraq land is being used by Hamas to counter-attack Israel. Now this is a worrying sign, and that is what everyone is feeling worry about, that in future if this war is being expanded to various other countries also, then there is a big problem. Initially, if you know that when this war started almost 10 to 14 days back, there was a reaction in Indian market and it was fallen, but again it has gone from almost 19,200 level to 19,900 level. That shows that yes, the war was discounted and everything is going good. But suddenly what happened now, this war is not ending. Everyone thought that this war is going to end within a span of 1 or 2 weeks, but that is not happening. Now many other countries are getting involved. Initially it was just a state between and the terrorists, because Israel, it's a country and the Hamas is a terrorist group, and that was the war between the two, and that's why no one was bothered that it will not be expanded and it will not be going across the countries. But what has happened now, the US has got involved and Hamas is giving a good fight, and Hamas is also been supported by Lebanon and Iraq, and their territory is used. And the way the war is going on, it is a worrying sign. Even UN is not able to help them. Basically Gaza Strip is in completely bombarded. Now if this war continues and if it is going across the country, this is what the market is fearing about. You can see oil price again gone up. Yes, it is currently around 89, but they will keep an eye on this war, because see, the one of the biggest problem which market feel that if Iran gets involved in this war, then it's a problem, because even US and Iran does not have a good relation. Now what will happen between a Middle East and a West countries, conflict is going on currently. Now US is completely supporting Israel. Okay, they are completely supporting. Even UK, France. Meanwhile India also given a support to Israel, but somehow India is supporting Palestine also. But yes, if something happens to Israel, and no, then US is not going to go back, because see, US has already sent the military troops and everything to Israel to protect Israel and also to help Israel to bombard literally Hamas group completely. Now if Iran gets involved now, then it is a big problem. Iran is having a 10% oil reserves of the world. If Iran gets involved, then there is a big hike in oil prices, and that may created a big problem. So you have to keep an eye whether Iran is getting involved. Again, the Lebanon and Iraq also slowly and gradually. So this is what is the fear. If Middle East start getting involved in the war, then there is a big problem. Also, another point is that because of this conflict, the oil prices is going up. Now if oil prices remains high across the world, now currently it is around 89-90, but if remains high, then it is not a good sign, because that US inflation is at a higher rate, and if oil remains on a higher side, your inflation is not going to come down. Again, yesterday only, basically the GDP growth rate of US was out. It was around 4.9%, which is showing a very healthy growth rate. Now what is happening because of this growth rate, Powell may not reduce the rate merely because he will wait till the GDP slows down. Unless the GDP does not slow down, how it can he can decrease the rate, and that is the problem he is facing currently. So higher inflation, higher GDP growth rate is not a good sign for Powell. Of course, across USA it is a good sign, but that means the US inflation will high on a higher side, then the interest rate will also remain on a higher side. They have to increase the interest rate in order to bring this inflation. That is what Fed is thinking about. And if the GDP performs so well over the time, then the problem is that higher interest rate is not at all good for the world economy as a large. If you talk about Russia and China, they are supporting completely Palestine group, and they are having a contradict view completely. And this is one, there is a tug of war going on between Russia, China, US, and now coming the Middle East also. So this is what is happening currently. So geopolitical crisis is actually overshadowing the complete economy across the world. Now talking about India, India cannot be isolated. If something is happening like this across the world, it is not going to be a good sign for India also. India will be in a problem, but not in a problem where it will fall a lot. Yes, but there will be a concern. From here also, India may go to 18,600 level, no, which is a 200 DMA and all that. But yes, today there is a good recovery. But what I'm trying to convey is that India cannot be isolated. If across the world there is a problem, then FII may pull back the money, and that will have an impact. And the main problem for India is again the oil. If oil remains on a higher side, maybe 90 and above, then India will face a hit. And again, Indian inflation will remain on a higher side. Then Indian RBI governor cannot reduce the rate. See, Indian RBI governor can reduce the rate only when he feel that yes, inflation is going to come down, and that is where they get a comfort. But India will always follow US. Unless US Fed rate does not decrease the rate, no, India is not going to decrease the rate, and that may not push the growth rate on a higher side. Overall long term, if you talk about, yes, India is going to do well, there is no doubt about it. Next 6 months to 1 year, we have to be careful what is happening across the world. Now what is happening, because of this high inflation, US may not decrease the rate till the next April 2024. So till there are 6 months from here, and this is what now may hurt market, because market cannot touch a new high unless the interest rate comes down. Yes, but the day interest rate comes down, market will preempt that, and 1 month before, 2 months before, the market will start going up. And that is what you have to keep in mind. Currently, if you talk about India, the problem, one of the problem which India market will face, that election is coming in April 2024. Now, when the election is there, Indian stock market will also be cautious. They don't want to take a risky bet. Retail investor, FIDI will be taking this into mind, because if something goes wrong in the election, again, you know that December also there is a 4 state election coming. So all these things will keep in mind among the investor, that yes, all this thing is coming, so they will refrain from taking risky bets or buying more. Yes, but we may go to 20,000, we may go to touch a new high before the election also. But a bull run, like, no, it will touch 22,000 within a span of 1 year. That we can understand only after May and June of 2024, once the election is over, and all this geopolitical crisis also, at that time the stance of how the US Fed rate will go down or not will be clear. Then people may take a leap of faith, and they can invest more in market. So that thing you always have to keep in mind. Now, if you talk about the quarterly result which is coming currently, if you talk about quarterly result, then IT industry is not at all doing well. If you talk about TCS, Infosys, HCL, Tech Mahindra, all these results you see, it's not at all good. This shows that yes, there is a worrying sign, and one of the biggest worrying sign is, as then more than 90% of the business is coming from US and Europe, and where there is a high inflation, that is not giving a good prospects for IT industry for the future. And that is the biggest worry sign for the IT industry. Of course, the higher dollar is helping IT industry, but yeah, we have to think about how the US economy and Europe economy is going to settle from here. Also, whether the high dollar, at what level it will be. Currently it is helping, but in future it may go down. So that, plus another point which I forget to tell you, is that artificial intelligence, how artificial intelligence is going to impact IT industry, that also you have to keep in mind. But one sector which is performed very well, what I can see from the last few results, is the banking sector. If you talk HDFC, if you talk ICICI Bank, Axis Bank, Federal Bank, so many results are out, and their results is very, very good. And one of the main reason is the high interest rate, and because of high interest rate, the net interest margin is going up, plus economy is in a recovery path. Correct. So that is also helping banks. NPA, of all the banks are much more on a lower side. They have a very good control on NPA part also. This all thing is helping banking industry to do well, so that is always a plus point. So even from here also banking industry look quite good, because in next 10 years if you are going to grow, then banking is the only sector which is one of the biggest growth engine. And of course everyone needs funds and loan, correct, and that is a banks plays a big role. So yes, in future also banks will do well. So banking results are coming good, and from here also it looks good. IT is still not doing good. Now hopefully maybe 3 months 6 months it will recover. Another sector which is not performing well is nothing but the chemical sector, because there is a problem in China. What they are doing, they are literally exporting chemicals to the other countries at a very low rate. They are giving lot of discount, and that is what is hurting chemical industry in China. Plus again, high inflation in Europe and US is not helping chemical. That apparels and all that, there is a less demand across the world, and that is what not helping chemical industry. So chemical industry currently it is going in a very rough patch. We have to see whether it will continue next 6 months 1 year, but yes, it looks like it will be a prolonged slack period in chemical industry. So even if you are thinking about investing in chemical companies, you have to keep a longer horizon, maybe 2 years 3 years. If you have that type of horizon, yes, you may get chemical stocks at a much lower level. Pharma sector has a good rally over the time in last 6 months 1 year, but the results are okay. It's not that they are having a great result. FMCG also, few of those companies are having a very good result, like ITC, HUL is okay overall. But problem is with the FMCG sector is they are marked to the perfection. They are already been valued so high that there is very less cushion remaining that you can earn a big money, maybe multi-bagger from here, because they are also called as an evergreen sector, correct? They are growing at a 14-15% CAGR return they are giving most of the years, and that's why from here also it's like a consistent return you can get it. But yeah, considering that whether big multi-bagger stock from FMCG, then all these big companies does not warrant into that category. Few of the companies are doing good, so that you have to always keep in mind. Another one company which sector currently working very well is the media, of course, the cinema and all that. The big releases are that, so that sector you can think about. Aviation industry, of course, because of the high crude prices, that is impacting that stock. But in future, when the crude price gets settled down, these stocks will have a very good bump up. I just given few sector, a flavor of few sector whose results are around, and from here what I think about it. But you always have to keep in mind automobiles, guys. If the oil price remains on a higher side, that is a problem. The another problem is that inflation. If inflation also remain a higher side, then also there is a slower in demand. But you have to understand which are the electric vehicle stocks and which are the stocks which are going to do very well in future when they are going to implement electric vehicles in much more broader level and much more technological advanced things they are going to bring, along with the collaboration with foreign players and everything. So all these things you have to keep in mind when you are investing in all these stocks. Overall, what I feel about Indian market is very well placed. So if you ask me what to do during this fall in the market, my only suggestion is you that if you are a long-term investor, please go and invest, because this is the level at which you have to get in, and you are going to get best price when there is a problem in the world, correct? Otherwise you are not going to get the best price. So please keep this in mind, and please invest in all these stocks, a good quality stock basically. And I think 18,600 18,800, it's a very good nifty level to enter also. Even if you want to do an nifty ETF, I think that is a very good level, because overall from here in next 5-10 years I can see a very good jump in India market. So always keep this in mind. Long-term story of Indian market is always impact, so you don't have to worry about it. So guys, hope you like this video. If you like this video, just click the below link and do subscribe to our channel, and do like the video, and I'll see you soon in the next video. Bye bye.